Hi everyone, today's video is all about pensions. Let me ask you a simple question. You keep hearing make sure you are paying into your pension, but has anyone ever actually explained how that money comes back to you later? Monthly salary, one big check, tax free. Today I'm breaking down how a UK pension is paid when you live in the UK. First things first, you don't need to be retired to touch your pension. For most workplace and private pensions, you can access it from age 55. From 2028 onwards, that goes up to 57. That's just the rule, it doesn't mean you stop working that day. What happens when you open your pension? This is where people get confused. When you open your pension, the money doesn't just arrive in your bank, instead, you are given choices. The 25% tax free part. One really nice thing about UK pension is this: you can usually take 25% of your pension completely tax free. A quick example: if your pension pot is £80,000, £20,000 can be taken tax free. £60,000 stays invested to pay your income later. A lot of people use this to clear debts, pay off a part of a mortgage, or just keep cash aside. Now for the income part, the bit that replaces your salary. You usually have two options. Option 1, annuity. You swap your pension pot for a guaranteed income for life. Same amount every year, no surprises. Option 2, drawdown. Your pension stays invested and you pull out money when you need it. More flexible, but the value can go up and down. There is no right option. It depends on how much certainty you want. How does the money actually hit your bank? When you live in the UK, pension income is normally paid monthly. It goes straight into a UK bank account and it feels a lot like receiving a salary. And what about tax? This part is important. Once you move past the tax-free 25%, pension income is treated just like normal income. It is taxed under the income tax rules, but there is no national insurance. Simple example, if your pension income is say £18,000 a year, you only pay tax on the amount above your personal allowance. A quick reminder before we finish: state pension versus the workplace pension. State pension is paid by the government every 4 weeks and it is fully taxable and no lump sum. Whereas workplace or the private pension is paid by your pension provider and there are flexible options that also includes a tax-free cash. So that's how a UK pension is paid when you live in the UK. Nothing complicated, access from 55, 25% tax-free, monthly income paid straight into your bank, tax like salary. If you want the next video on UK pension if you move abroad, or pension for NRIs, or how to track old pensions, drop a comment. I'll see you in the next one.